Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 16th of August 2019. So, welcome, everyone. Welcome to this Friday's morning session where we're going to have a quick look at a few of the markets, a few of the charts, the usual stuff, basically. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just a quick mentioning, as always, just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, specifically our JFD research page, where you can go in and have a look at different analyses we do on a daily basis. So I believe you can find some of them useful. So feel free to check us out. Feel free to check us out as well. In about an hour and a half, we'll produce our just a daily commentary. You can have a look at that as well. So, but for now, let's jump into the charts. Now, the first one I want to touch on here is the FTSE MIB. Now, the Italian index here yesterday got hammered the most, should I say, actually, yesterday it was closed yesterday, but looking at this picture here, you can see that on Wednesday, yep, it did slide further down. You can see that how well it traveled to the downside here. Now, the only thing is actually what I wanted to focus here on mainly is not the fact that it declined here, and the one that I wanted to show you here from the technical perspective is a weekly chart. And basically you can see that we're having a nice somewhat of a double top here formation. We are getting closer to the neckline, but keep an eye on this index. I mean, it's quite interesting to see, because as you can see that yes, it kind of slid lower. It continues to push in that direction. In a way, there is still some chances here, and like I said, looking at this weekly chart, there is still some good chance for this one to push further down. And like I said, keep your eyes on this potential neckline here of this potential double top formation. And the neckline here is I wouldn't even actually draw this one as a horizontal line. I would actually draw it as a slightly tilted one, like this one. So basically here it makes that the neckline could become a little bit closer here, and if we see a drop below this, then yep, in a way we could see further declines. The index could drift further down and could in a way break this 19,535 zone here, which is the lowest point of May this year. So, and this way like I said, the index could travel further down towards, maybe even towards the lows of December last year. But again, let's keep an eye on it. Again, like I said, this weekly chart is quite interesting to look at. Something could be building up nicely here. The only thing is that why I want to kind of also to be for you to be very careful here, because yes, on one hand we could see this nice double top formation with the neckline right here. If it breaks, then yep, this formation will be confirmed. For now it's not confirmed, but just like I said, something to keep an eye on. And as well, if this, let's say this area here, this little tentative upside support line holds, and we see the index rebounding and pushing back up. Now in this scenario, keep an eye on a potential rising channel formation here. I do understand that these are two different scenarios and two opposite, but just like I said, I'm trying to give you all the options here. Just like I said, if this potential this upside support line holds, we see the index reversing back to the upside, then we will class this as a potential rising channel formation. But if this If this upside line breaks here and we see a drop below the 19,535, now this would confirm a break of a neckline and would confirm in a way this double top formation. So for now, like I said, I'm giving you these two scenarios. We are very close to this upside line, and that's why I just want you guys to kind of keep an eye on it. Like I said, if you don't trade it, then you could in a way just have it as an indicator, because in a way, if this continues sliding further down, the other European indices might follow suit as well, and they could be dragged by the weakness in the Italian index here. So basically, guys, for now, keep your eyes on these two scenarios that I've just mentioned, and let's see how this is going to play out. Jumping into, actually, let me just jump back into a daily chart and jump back into gold and jump back into a 4-hour chart. So the picture here is interesting. So of course, as I've talked about gold this week, and what I was saying, that if we see a pushback above the 1510, yep, this increases the chances for another push higher, another move towards the upside here. Now the area that I was targeting initially was around, of course, the recent highs near the 1535 level. The slightly above target here for us is also the 1540, which previously acted as a good area of. Let me just show you what that level was. And for this one, probably I need to jump into a daily chart. This is coming back from 2013, that 1540 level. This is basically they acted as a good area of support here back on the around the 8th of April, if I'm not mistaken, around the 4th of April. There we go. So around there, basically, guys. So this level here, the 1540, still kind of remains a good one to watch. But like I said, from the shorter term perspective, looking at this picture here, of course, overall we're still trading above this upside support line. The trend is still to the upside, but from the very short-term perspective here, very short-term perspective, we could in a way see a bit of a slide here. For now, you can see that gold is already correcting back down. Of course, let's see if it actually can stay above the 1510. But let's say if today we see a drop below the 1510 zone, this would also place the commodity below the 21 EMA here on the 4-hour chart, and in a way this could increase the chances for another drop towards the psychological 1500 level or the 1490. So some good levels here, but again, like I said, for now, be very careful with this one. There is still a possibility for this one to push further up here. And we could still maybe see a nice good test of the 1535 zone. Probably keep your eyes on today's pivot, that's probably the only main thing that you can do for today. Keep your eyes on today's pivot, which is around the 1519 zone. If it holds, if the commodity struggles to push below it, then yep, we could see this nice rebound and a push back to the upside. So but if it starts to break here, now this is where we'll be very cautious, because like I said, if it continues to slide further down and drops again below the 1510 zone, then well, I mean, we could see maybe a revisit of the psychological 1500 level, or even below that, the 1490. Jumping into a few pairs now very quickly, GBPUSD. So of course, yesterday had a nice push to the upside. UK retail sales helped to do that, and of course, yes, I mean, the long-awaited kind of reversal, or should I actually reiterate that? Everybody's waiting for that reversal, of course, because we're still within the downtrend. It's still moving lower. The only thing is that, yes, what we've mentioned in our yesterday's analysis, in our which you can find here on our website, that even though we could we had a nice push higher, and basically before the data came out, what we said, that if the data comes out better than expected, yes, we could see that nice good push in the pound to the upside, but still, if the data is below the previous figures, then in a way this could still keep the pressure on the pound. And this is what happened basically. Initially we saw this nice good spike to the upside, move to the upside, but then it kind of retraced back down again here. It found good support near the 1.21 zone, 2107, something like that, from which it kind of rebounded back to the upside. Again, like I said, don't get me wrong, we could see maybe this one climbing a little bit to the upside again here, maybe today, but overall we're still kind of bearish on the pound given the current Brexit situation, and because Brexit did not disappear anywhere, it could still weigh in on the pound in a negative way. So that's why, guys, for now, yes, we could see a push higher, but we will class that as a temporary correction before another leg of selling. And don't get me wrong, I mean, in a way it could move a little bit higher, but let's say if it struggles to push higher today and starts reversing and lower again and drops below the pivot and drops below the 1.2107 here, then in a way we will consider a possible test of the psychological 120 level, because that has not been tested yet. It came close on the 11th of August. It tested the 1.2013, but didn't kind of quite test the psychological 120 zone. So that's why for now, guys, be very careful with the pound. Yes, we did have a nice good push yesterday, but as we've mentioned also, that push could be short-lived, and like I said, still the Brexit kind of tensions could still be weighing in on the pound. So that's why, guys, for now, be very careful with this one. If it travels above the 1.2210, then there is a possibility maybe to see a larger correction here to the upside up until this downside resistance line here. So that's why, guys, for now, like I said, please be very careful with the pound. I mean, yes, we could see this one pushing a little bit higher, but again, like I said, the Brexit problems did not go anywhere. Euro USD. So I talked about this one this week and the beginning of this week, and basically what I was saying that if we see a drop below the 1.1163, this could in a way open the path towards the 1.11 zone. So I started talking about this in the beginning of the week. You can see that in my previous videos, and yes, we had a nice break here to the downside on the 14th, and then what I was saying that we could see a push back, a retracement back to the upside, but if it struggles to push above the 1.1163, this is where another round of selling could come in, and we could then target the 1.11 zone. So we are currently sitting around there, just maybe slightly above that, but around this area. And let me just quickly adjust this level. So basically, this is what the pair managed to reach, the area around the 1.1090. So this played out as a nice good area of support from which the pair slightly rebounded. Now again, we will continue targeting the downside here, especially if we see a drop below the 1.1090. This way, the pair would confirm a forthcoming lower low on the short run. And we could maybe target the area around the 1.1023 or even below that. But again, for now, we'll take a very careful approach here. We could see this one correcting back up again a little bit, but that's why we're gonna mainly focus right now on this 1.1090. If we see a drop below this, then yep, this could open the path towards lower levels. We could target some of these below here. Initially, we will target this little obstacle, not this one, but this one right here near the 1.1068. This could be a nice good area of support, initial support, but if the selling is still strong, then yep, we could see further declines. But in order for us, let's say, to target at least some higher levels, ideally we would like to see a push back above this 1.1163, and this way initially we will target it to the 200 EMA, but if that fails to withhold, then we will aim for slightly higher levels here, again aiming for that 1.1250 zone. Could be a nice good scenario here. So for now, guys, be very careful, and like I said, keep your eyes on some of these levels. Like I said, on the downside, this 1.1090, a nice good break below this could lead towards further declines. If we see a correction back up here, we're going to remain neutral. We're just going to wait this one out, and for us, let's say, to maybe jump into some buying again, we would like to see a push above the 1.1163 zone again, and then maybe, like I said, we'll target this the 200 EMA or the 1.12 zone, and then we'll take it from there, guys. And the last pair for the session, the USD-CAD. Now, this pair is quite interesting, and this is what I talked about yesterday. So basically, we were in the morning. I talked about this when I said it's retracing lower, but if it holds around here, and that was near yesterday's pivot, we could see a push to the upside. It did travel higher, but as you can see, it kind of failed to reach this 1.3345 level. Now, this is what I was also talking about yesterday, and in my previous videos when I was covering USD-CAD. Yes, I mean, on one hand, it is looking quite nice. I mean, here looking quite positive. We could see further moves higher. The only thing is that for us now to consider further moves higher, we will wait for a push above that 1.3345 level before kind of examining, like I said, before getting comfortable with higher levels. Because what I've also mentioned was that if this, let's say, decides to slide back down again here and drops all the way towards this upside support line, then we'll be very careful, because in a way, if this line breaks and the rate falls below the 200 EMA and falls below the 1.32 zone, this is where it could become a nice good double top formation here on the 4-hour chart, and we could then target some of these lower areas. The good target could be around the 1.3109, maybe 1.31 zone. This could just would come as a nice measured target. If this, of course, plays out as a nice double top formation. So that's why for now, guys, of course, yes, it is correcting slightly to the downside. For us to continue targeting to the upside, we ideally would like to see a nice good pop above the 1.3345, because, like I said, given that it's now falling below its pivot right now, today's pivot, this in a way increases the chances for a further slide lower towards the S1, which is around the 1.3285, and then we'll take it from there, because, like I said, it may even slide further down here to test this upside line. So but again, that's for now, that's a bit of speculation. If this slides lower and let's say drops even below the S1, our kind of the last point for the bulls here to step in could be around this 1.3267 zone that I've talked about in my videos, in my previous videos. So in a way, this could be that last resort for the bulls to step in until, let's say, this starts falling further down. Of course, I'm not saying anything. The bulls could step in here near this upside line, but the more this line gets tested, the more chances it is for it to get broken. So that's why guys, for now, be very careful with this one. And keep your eyes on some of these levels that I've just mentioned. So like I said, it could continue traveling lower, could test today at today's S1, which is around the 1.3285, and then we'll take it from there. If it wants to slide further down, the 1.3267, that's what we will be looking at then. But if that doesn't hold, then, well, I mean, the path holds towards this upside line, and then we'll take it from there, see what he wants to do. If he wants to break it, then you have good news for the bears, but if it wants to stay above it, then we'll take it. Like I said, we'll have a look at it then. But if, let's say, this doesn't travel lower and reverses to the upside, for us to get comfortable with higher levels, we need to see a break above the 1.3345. Okay, guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, as always, that's 13:15 GMT. We'll have a look at some of these instruments. We'll see how they've performed over the course of these hours, yep, we'll take it from there, guys. I hope you have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.